Welcome back to Explain the Charts. Today we are taking a close look at USDCAD, examining the latest news and diving deep into our candlestick charts. It's April 17th, 2025, and there's a lot to unpack, including the Bank of Canada's recent moves and ongoing global trade tensions. We'll analyze the potential impact on the US dollar and Canadian dollar. Based on recent news, the US dollar to Canadian dollar pair is influenced by factors like the Fed's wait-and-see approach and fluctuating oil prices. We also need to consider potential impacts of tariffs on global growth. Remember to always trade responsibly and do your own research. Our analysis is for informational and educational purposes only. So, let's get started. Let's first examine the daily chart to identify key trends. We can see a consolidation pattern over the past few months, with price action ranging between roughly 1.30 and 1.47. Key levels to watch out for are the recent highs around 1.47 and the lows near 1.30, as these could act as resistance and support respectively. Zooming in to see price action, we can see a recent attempt to break through 1.39, which is a resistance level we need to keep a close watch on. Based on the latest news, the strength of the Canadian dollar seems dependent on the Bank of Canada's monetary policy and also influenced by U.S. President Donald Trump's tariffs. Now let's switch to the 1-hour chart for a closer look at recent price action. Here, we can identify short-term trading opportunities. Looking at this zoomed-in view, we can see a tight trading range has formed between 1.38 and 1.39. This indicates indecision in the market. Short-term traders might look for breakout opportunities, while others may trade the range, buying near support and selling near resistance. Pay close attention to any news releases or announcements from the Bank of Canada, as these could trigger a significant price movement. Currently, it's trending near the top of its hourly range, and we will have to see if we can continue this trend upward, or if it will be rejected around the 1.39 handle. Finally, let's look at the 15-minute chart for even more granular details. We see a lot of choppiness in the price action, suggesting high volatility and a lack of clear direction in the immediate term. Traders should be cautious and consider reducing their position sizes. Scalpers might find opportunities in these short-term fluctuations, but it's important to be nimble and use tight stop-loss orders. We are now in the evening and trading volume is thin, so keep that in mind. To recap, key price levels to watch are 1.30 as long-term support and 1.47 as long-term resistance. In the short term, 1.38 and 1.39 are important levels to monitor. My unbiased prediction is that USDCAD will continue to consolidate between 1.38 and 1.40 in the short term. This scenario is about 60% likely, especially if the BoC maintains its current monetary policy. A breakout above 1.40 could signal a bullish trend, while a break below 1.38 could lead to further downside. Be sure to keep an eye on the upcoming Canadian election, which will be held in the next few weeks, as this may dramatically shift the country's fiscal policy. That's it for today's analysis on Explain the Charts. Happy trading!